right, the question is, what causes a stock to suddenly drop like that, and who causes it, and what all of a sudden these sudden catalysts, right? You've been in a company that went from $10 to 10 cents. Okay, so this is like the fear that people get told, if you have a spouse and they're like, oh my God, don't put your money in the stock market, you could lose it all. There's no such thing. And I only say this because there's idiots out there, and there's people that actually study. You're going to buy something, you're going to buy a quality company, and you're going to go ahead and look at earnings reports, you're going to look at leadership, you're going to do all of those things, right? So when a company suddenly drops, like I had showed you a chart of Lululemon, it fell down to around fair value, 160 a share. It's not a big deal. I mean, there's so much to lose, right? They're still trading 5x times book. There's this thing called tangible book value, okay? Tangible book value is the worth of a company if it were to liquidate. Let's just say they stopped operating tomorrow and they auctioned off everything and sold down, pay off creditors. What's left? That's tangible book value. Then there's book value, right? And book value, the quickest way to look up book value would be something like, it's called current ratio. And a current ratio is your assets minus your liabilities. What do you have of any value minus your creditors, whoever you owe money to, right? So when your current ratio is greater than 1, that means you actually have some type of profit within that company. And there are some companies that are stretched out on debt. There's some companies that are growth stocks, as they call themselves, and they don't make a profit yet, or they will soon, or they're trying to right the ship. There's a lot of reasons, right? But as far as taking a price, short sellers could take a price. The insiders themselves could do stupid things to take a price. They could dilute the shareholders. They could buy back shares with cash, and they don't have any. And then they put themselves in a bad way because there's these things called covenants on the bonds, okay? So let me explain. You're a company and you borrow $1 billion. And when you borrow the $1 billion from JP Morgan or from Citibank, whoever, doesn't matter, Citigroup, you go in there and they go, hey, guess what? You're going to borrow this $1 billion, but you have to have 500 million of it in cash and reserves at all times. So we want to know what you're doing with this money. Matter of fact, put one of our guys on your board of directors, 2 of our guys, because we want to make decisions of what you do with the money we just gave you. This is what you call covenants, okay? So they have all these rules that you can do with the money that they give you. What you want to do as an investor, you want to find out what are the covenants of the money that's been borrowed and who's in charge of it. Because then that will tell you what you have the right to do at any given time to protect yourself. There's these things called anti-takeover measures. And this is all in the prospectus for a company. You're going to read all the guidelines, right? How many shares can you actually issue? What are the preferred shares? What's the voting rights of them? Who has eligibility to them? And then who's here on this board of directors, right? Where do they come from? So you look at all this stuff before you ever buy one share of anything. Don't just go buy stock into a company because somebody said, hey, the stock's going up tomorrow, or the chart looks great. That's not how it works. You have to study. You have to go look who's in the board of directors, what's their track record, what's their history, and then you can go ahead and do the product and the environment and the macro environment and geopolitical impacts. You can do all of that after you look at the leadership, after you look at prospectus, and after you actually break down a company. This is how you invest. There's guys out there that are trading. Don't get me wrong. They're day traders. They go out there and they flip a stock and then they're, oh, I'm a successful day trader. I'm this one. No, you're not. Because you're going to spend that money, go spend it. That's not how the stock market works. Stock market is all about net worth. It's how do you build your nest egg to get bigger and bigger and bigger and multiply it. Just keep going. Right now, people look at me like I'm crazy because I say GameStop's the best investment on Wall Street, right? But it's because it's not valued correctly. No one's given it a value. And yes, and I understand, they're not supposed to because they haven't deployed their cash yet. But that's why you have to give it, like you literally have to give it some type of value because that's considered book, right? Like literally they have assets minus liabilities. When their assets are like $10 billion, which is what they are right now, and their liabilities are 2.5 after the bonds, and if you take out the bond liability, they literally have $6-7 billion worth of cash and assets, and they're sitting on about less than $1 billion in liabilities. So they're already at 7x without the bond activity, without the convertible notes that they just did. But the convertible notes they did, this is why we talk about this in the covenants, they borrowed money, okay? They offered 5 to 7 years on a payout, 5 to 7 years away from now. But they offered portion of their company, and they got a good rate on it, $30 a share, and there's zero covenants, no restrictions, no prerequisites, nothing. They didn't have to put anybody extra on the board of directors. They're not being told what to do with the cash. They can do whatever they want with it. So that's why you want to invest with companies that have a lot of cash, okay? I'm going to explain it to you guys. Some people, stupid people on Wall Street, CPAs, all these guys, CFAs, all these certified financial bros, right? All these guys who paid money for a elementary education. Let me tell you something. They have never invested in a distressed credit cycle. Never. They've never invested in a crash correction. They weren't here in 2000. They weren't here in '08. Hi. I have been buying into this market since what, 2006? No, even before that, I had a TSP when I was in the Army. So people that are in their 40s, 50s, 60s, they've seen this run before. These 20 and 30-year-olds on TikTok, you laugh. You're just like, you kids are stupid. Or how about the guys who actually got their degrees and they got a job finally and they've been winning for the last 15 years? They're like, hey, we can do this all damn day. No, you can't. Because you know what's going to happen? I'm going to tell you what's going to happen. The market's going to correct. And everything's going to be to the ground, right? It's going to crash. We get it. Correction, right? People are going to get fair value for what their securities are worth. I'm with you on that. But you better have cash. Because if you don't have cash, if you think you can go to the market and offer shares, hey, buy me. We're doing ATM. We want to raise some money. You can't raise money in a crash. Nobody's willing to buy you. There's not a hedge fund in the world. Everyone's going to be sitting on their hands. They're going to be like, no, this market's crashing. We can't give you money. No way. It's uncertain times. All their accredited investors, everybody who's there wants to give out money. All these, what we call general partners versus limited partners, okay? All the LPs, they're going to be right there like, we're not putting any more money into this pot. Everything's down. That's what happens. People sit on their hands. They're afraid to spend money. But the smart ones, they have cash and they're waiting for this crash. Warren Buffett has $350 billion on the sideline. Okay, well, I know a guy named Ryan Cohen who has almost $10 billion of cash on the sideline waiting for this to happen. That's the CEO and chairman of the board for GameStop. $10 billion, guys. As much cash as Walmart. Like, people have to know these numbers. They have to know what's about to happen. When the market crashes, you might not have cash. You know, you and your buddies might be scared of the market. You want to be invested into companies that have cash. And I'm telling you who has cash. Just go look at it. Go look at the sheet. It's phenomenal. And I'll give you another example. There's a company out there called Palantir that everybody's huge on right now. They trade at a 550 PE ratio. They make $700 million a year, and they have $6 billion cash. Listen to the numbers. $6 billion cash, $700 million a year is what they make. Their value is $300 to $400 billion as a company. That's what Wall Street gives them. It's crazy. Okay. GameStop has more cash. GameStop has 9 right now compared to their 6. So GameStop has $3 more billion. Okay. GameStop makes around $400 to $500 right now million a year. After this year, it'll be closer to 5. But they make 7, so they make $200 million more dollars. And to get the $3 billion that they're short on cash for the $200 million more dollars, they would have to be in business for like another 10 years, 20 years to get that other $1 billion, right? The $2 billion they're missing in cash compared to GameStop. $3 billion they're missing compared to GameStop. Do the math. It's okay. I'm here for you. So you're telling me that I could buy Palantir for a 550 PE ratio at a crazy price, crazy value, everything. Why would I? When I could just go get GameStop. Palantir's $400 billion worth of market cap. GameStop's at 10. This is how gross this market is. You will see what I'm talking about. There's going to be a day, okay? I don't know when it's going to happen. Hey, earnings are on Tuesday. I don't know when it's going to happen. I'm just telling you, there's going to be a day when this market corrects. And it's going to be like Bubba Gump shrimp. You're going to see Bubba and Forrest, and that's GameStop, by the way. We're just going to be out there. Hey, Forrest, look at all these shrimp. Because we're the only ones that are going to survive this storm while everyone else gets wrecked. It's GameStop, babe, if you only knew the truth. Oh, by the way, Wall Street won't tell you the truth. That's why I exist. Peace.